Again, I'm excited to be here with you guys all today. And I just want to go ahead and give you guys this quick weekly outlook so we can be prepared going into this week. I'm definitely going to take a look at the calendar, starting it off by looking at the calendar, because there are a few events that we have to pay attention going into this week. That's probably going to make the markets gain a lot of volatility, right? And a lot of volume in the markets because of these actual data releases that are actually going to be coming out. Now, on Monday, we don't really have nothing too crazy. On Tuesday, we don't have nothing too crazy, but it's Wednesday where it really starts to get interesting. All right. On Wednesday, guys, we have core CPI and CPI data getting released here in the US. All right. Now, this is going to be very, very important data that gets released, right? A lot of traders, a lot of investors are going to be eyeing this specific release because this is going to see if inflation pretty much is actually starting to get under control, right? CPI, it measures the change, right, in the price of goods and services, right? With inflation, this pretty much talks about the change in the pricing, right, of services, of products and services. So with CPI, if it comes out lower than, say, what we previously came out as, right? Let's look at this right here. This one right here is what I'm looking at, right? CPI year over year. Right now, they're expecting it to come out at 8.7%. Last CPI reading, right, it said that inflation is at 9.1%, which means the price of goods has changed 9% year over year, right? The price of goods and services has went up 9% from this time just last year. But they're expecting it to turn around, right? They're expecting it to actually go lower, which is pretty much the reason why we're seeing interest rates go higher, right? We're seeing interest rates go through the roof because they're trying to figure out a way to fight inflation. One way to fight inflation is by raising rates, because that is a way to actually start tightening up the monetary supply, right? So this is something, guys, that we have to be aware of going into this week. Wednesday, August 10th, 8:30 a.m., we do have this reading come out. Now, if this number comes out higher, which is a very good possibility, if it comes out higher, then that is going to absolutely shock the markets. Because that means even with all this tightening that the Fed has been doing, with raising interest rates, right, with also pretty much, everything that they're doing, right, they're literally sucking money out of circulation by the billions and billions and billions by the month, right? They're going through a process of quantitative tightening right now, right? Where they're tightening all sectors, right? So that they could try to fight inflation in the best way possible. So with this release, it's going to tell us if what they're doing is actually working, right? This release is going to tell us if them pushing interest rates up pretty much over, what is it at 1.75%, maybe 2% now, right? But raising rates almost 2% for the past 6-7 months. We're going to find out if all that has actually been working to fight the Fed's main goal of dealing with inflation. So you best believe that the markets are going to be on edge this week. You best believe there's probably going to be a lot of volume in the markets this week. So we as Forex traders have to be aware of that. The markets will probably be super volatile. Right now, again, the rumor, or at least the projections, is that it's going to go down to 8.7%, which 8.7% inflation is still extremely high. Right? Keep in mind, guys, right? The Federal Reserve's objective, or their goal, or what they would like to achieve, is 2% inflation, 2.5% inflation. Right? It's probably going to end up rising. It's probably going to actually end up finding a new norm the way this is going, but their overall goal is 2%, right? So we're still, even at 8.7%, still trading literally extremely high, right? But the fact that we do see it actually reversing, that in itself could bring some type of optimism in the markets. And a lot of the traders and investors out there can utilize this as a potential opportunity to start finding some reversals in these markets. Because overall, a lot of these markets, guys, we have been obviously in a risk off type of sentiment for a little while now. Risk off is benefiting the safe havens, right? Mainly the US dollar. When we are experiencing risk off sentiment, That means take the risk off the table, right? Take those riskier assets that you're invested in and liquidate them. That's what risk off means. We've been in risk off environment. I mean, let's take a look at the charts. All right, let's go look at the S&P 500. All right, look at this. This picture right here shows it. All of this is risk on environment. Why? Because the S&P 500, right, which is an index made up of 500 companies in the US, right, is showing that this was the time to actually invest. This was risk on. This is considered risk on environment, risk on. Stocks are considered a riskier play. They are considered a riskier asset compared to other avenues. So whenever we see the stock market going higher or one of these indexes going higher, that is telling us the type of sentiment that the market is experiencing, right? This is risk on sentiment. But what have we been seeing since the beginning of this year? We haven't seen the market actually go bearish, right? Actually start going down. So if this is risk on, showing us that we are in a risk on environment where investors and traders and the big market makers across the world, right? When we're risk on, they're investing into these riskier plays. When we're risk off, they're liquidating out of those riskier plays, and they're probably going to invest into the safer avenues, right? What most big time players do when the time is right, and when we are experiencing risk off environment, which is this risk off, right? They either start to go cash so that they can be liquid and sit on cash, or some of them actually go ahead and start buying government bonds, right? Because government bonds are also a form of a safe haven type of asset, right? You invest a certain amount with the actual government, you buy a bond, they give you a maturity date, right? And then you earn a pretty much an interest rate commission type of thing on top of it, right? Where you can get a coupon for maybe 5%. So if you invest 100, you get a 5% coupon at the end of the maturity date. And that's pretty much backed by the government, right? So it's pretty much guaranteed, but you do have to lock your money up for a certain period of time to achieve such a very small return. But it is considered a safer play. And that's usually what a lot of big money actually ends up doing, right? They either sit on cash or they start investing it into things like that. So overall, we have been seeing the market telling us that big money has been flowing into a lot of those assets, bonds, all these things, right? So we have to follow big money. So right now, let's go back to the dollar now. So what I'm looking at for the dollar, guys, going into this week, right? Especially with CPI on the horizon, because that's like the main one we have to look at going into this week. There is another big one that we have to pay attention to. The initial jobless claims on Thursday is definitely going to be interesting just to see pretty much how employment numbers are actually coming out. Now, last week, there was a major beat in projections with non-farm payroll, right? Which is absolutely crazy. But that's a topic for another day, right? But overall, guys, we do have the next major data release is going to be for the pound. Here on Friday, we do have GDP numbers getting released. I mean, they are predicting right now, guys, a major decline in their GDP over there in the UK, right? That's going to be a crazy drop off, right? So we have to understand how this is going to impact the currency as a whole. But I'll actually talk to you guys about that throughout my live streams going out throughout this week, right? But that's just something we have to pay attention to as well. But overall, those are like the main ones that we're going to be looking at. So let's go ahead and go right into the charts and see what we have here, guys. So overall, when I'm looking at the dollar itself, I'm really looking at what really happened last week, right? What really happened pretty much throughout the whole course of last week, and what have we been doing, you know, compared to what the overall bias of this market really is, right? Overall, the overall swing of this market is what? We're clearly bullish, right? This market has been going higher and higher and higher, guys, and this is all because of obviously everything that we've been dealing with, right? This right here is showing inflation. When the value of the dollar increases, so does the price of everything that we do, or so does the price of everything that consumers purchase, right? So we see this going up. We can also pretty much say that the price of our goods and services are also going to increase as well. But that's a whole different topic, right? But overall, looking at us doing this, now we're looking at the markets, and now we have to identify what is next, right? We understand that we have been in a bullish trend. We could see higher highs, higher lows, higher highs, higher lows, higher highs. And now we just created a higher low, reacted off of previous structure, getting a nice reaction off of a nice area of demand, nice little reaction zone down here, right? How do I know that level? Why do I identify this level right here? I'm actually going to highlight this so you guys can see it. All right, because very simple. We're at this level of resistance. When did the buying momentum really come in? This candle right here, right? So the buyers really stepped in right there to send the dollar flying. So next time we come down into this level of demand, we can potentially expect another similar reaction. Why? Because when buyers at the big money, or when big money started to buy up at these levels, there's a lot of times where all of their orders do not get filled because of just how fast the move could have happened. So more times than not, when price does come back down to actually retest these areas, there's a lot of orders that are now going to get filled that were left behind from the last run. So because of that, this is why we look for opportunities to go long at areas where we have evidence of big moves. Big candles is clearly telling us, guys, that smart money is playing these areas. When you see a large candle, you also have to understand that that's caused by smart money, right? The big boys. So we want to stay with that. We identify those clues, and then we stay with that. So if I'm overall long-term bullish, just because I can see that we're in an uptrend, I'm looking at what the market is doing. I see that we're on a correction because the overall trend is bullish. Whenever we're going against the overall trend, that's a correction, right? So this is a correction. But once we got to, again, level of structure on that correction, we're starting to experience bullish plays coming back in, bullish momentum coming in. So these are opportunities for us to go ahead and get involved. All right, I'm saying all that to say, I'm thinking this thing is going to continue going bullish. All right, I believe we still have a lot more upside here for the dollar itself. So I want to look for continuations to the upside, right? I'm expecting dollar strength to continue going into this week. Now, does that mean we want to just start buying dollar assets right now? Not necessarily, right? Because if we go to lower time frame now, 4 hour, we do see that we actually had a very strong end to the week last week. Now, although price could just open up and continue, I don't want to chase that, right? That is trying to chase a move after a strong push. I want to see a pullback and then an opportunity to go ahead and go long, right? So if I'm expecting the dollar to lose value, right? Let's talk about assets like Euro USD, right? USD is the actual second currency of this pair, right? So if this is losing value, the dollar is losing value, which is now causing the euro to gain strength. What direction should this actually go, right? In the actual chart, it should go up for that period in time. Because whenever the dollar is losing strength, the euro is gaining it, and that will cause that chart to go up. All right. So we have to learn, again, how to just correlate the dollar with currency pairs. And then you'll really be able to understand exactly how to play this. So what I'm looking for going into this week, guys, is for the dollar to come back down to this level of structure, 106.2, right? Anything 106.1, 106.2. And if we can get down there, that is where I would like to go ahead and start buying the dollar once again, heavy, right? Go ahead and play off of this level of structure right here. And then from there, experience a lot of dollar strength, right? So that's how I'm going to be setting myself up for this week. Dollar strength after a minor pullback is going to be the play for me. Risk off sentiment is still very much here. There's still a lot of chaos, especially leading up into this week with CPI data. There's going to be a lot of fear, uncertainty, and doubt all throughout the markets, with big time traders and investors really not knowing what to do, what to expect. So I'm still very much risk off because I'm taking advantage of that fear and that uncertainty and that doubt right now that there is all throughout the markets, right? So that's what I'm looking for. Small pullback, continuation, right? Let's go ahead and take a look at assets like Euro USD, which is definitely going to be one I'm going to be playing. Also, I have a few other ones I'm going to look at too that I'm going to be playing, but yeah, let's go ahead and take a look at this, right? So overall, guys, similar concept, okay? Euro USD does the exact opposite of the US dollar. So overall, now we just got to look at it and break it down exactly how I just did. Now, we're going to do this in a much quicker form, though, right? Because I want you guys to see how simple it really can be. So when you first come to an actual chart, all you do, the first question that needs to come up to your mind is, what is the trend? All right, bet. The trend is this, right? We're in a downtrend. The market's clearly going lower and lower and lower. So the path of least resistance at this exact time is for price to go lower. So we have to be able to identify the fact that the momentum and the trend is bearish. So we're going to have a higher probability of looking for opportunities to stay with that trend. Okay. So next thing we want to do after we identify what the overall trend is now we really just figure out what price has been doing. Right here, price has pretty much just been going sideways, but I still expect, again, a lot of bearishness to ultimately come in. Why? Because look at what the market has been doing, right? We have been, again, bearish, but when we come in closer, we had a strong push. Then we had the market come up, and then they started creating this pattern right here, right? Where we have resistance, we run the resistance, but then we immediately get rejected with a stronger push. Shows momentum, right? We come back up to test where the sellers came in, and then we got a nice strong reaction to close out the week, which again is exactly what I expected and what I was playing this entire week. So now, since we have this sign of strength, now we can expect some type of a pullback and continuation to stay in the overall trend. Okay, so again, if I'm expecting short-term dollar weakness, then I should be expecting short-term euro strength. But then when the dollar starts to gain strength again and starts to fly, that's when I'm expecting the euro to go ahead and turn around as well, because now the euro would be weaker against the dollar, which will cause price to go lower. So I'm definitely going to be setting up, guys, for the sell going into this week for the euro. Now, obviously, the market's going to do what it wants to do. I get it. I know a lot of people are probably going to look at, but Abel, man, look at this whole imbalance, right? And I get it. But if we go up there, we go up there. Then we'll play it off of there. But what I think for right now, the most likeliest play is probably just to look for continuations just based on how market structure and how price action is reacting right around this level. Okay. So I like that overall. Again, and if price does continue higher, to go ahead and maybe close a lot of this, imbalance right there, then so be it. We'll go ahead and deal with it when it gets up there. For now, I'm focusing on this, and I really do like the opportunity to go ahead and continue a move lower here for the euro, guys. So that's going to be pretty much what we'll be looking at going into this week. It's definitely going to be one of my favorite setups, one of my favorite opportunities. So we'll see how that one ends up going and how that ends up playing out. Now, another one, guys, that I'm very interested in is AUD USD. Again, we were pretty much talking about this all week as well. If you were on my live streams, I obviously did not get my entry that I wanted to see, but I am still going to be holding this position. I don't know, for some reason, I still believe that the market is going to want to go ahead and run these highs before we go ahead and shift lower, right? I still think that that is a possibility. But if that were to happen, then that means Euro USD will probably end up going deeper too, and that's not what I want to see. So what I'm going to be doing going into this week, guys, for the Aussie, I am still bearish, right? I still want to see, bearish momentum, right? If you can see, we're still been flowing going to the downside for, literally for almost 10 years, right? We're talking about this is all the way back in 2012, 2010, right? So now we've still been in this little bearish trend. Look at this daily reaction that we just got. A nice daily closure, bearish reaction off of the 50-period moving average, off of a very strong reaction here, or a very, significant area of supply. Strong reaction, pullback, strong reaction. We could pull back, strong reaction, continue. Trading is that simple, right? Especially when you don't rely on too many indicators or anything like that, and you just rely on learning how to actually read market structure and read price action and just understand order flow of the market and just staying with the order flow of the market. and then identifying levels of supply and demand and just focus only on entering off of areas of supply and demand. When you focus on stuff like that, trading is going to change the game for you, right? So I think overall, this is still a possibility, but I don't think it's going to happen. But I do think that we are going to probably pull back up maybe to around the 0.695 level. And then from there, I would, it might be a good opportunity to go ahead and start looking for some shorts. Right now, if the market does go up to this level, I'm definitely selling the hell out of it. Right, I definitely do want to go ahead and take the opportunity to go short. If for whatever reason price does come up here, then yeah, I'll be looking at short for sure. But for now, I'll be playing, maybe the reaction off of the moving average up here on the 4 hour or so. Right, for now. All right, and then we'll deal with whatever happens after that. But that's AUD USD, guys. Overall, it does look pretty juicy. It does look pretty decent. And it's something that I'm gonna be keeping my eyes on as well going into this week. Let's go take a look at GBP JPY. Right, I know it's definitely a fan favorite. It's definitely one of my favorite pairs to actually trade, just because how fast it moves, how volatile it is. But let's see what we ultimately got here, guys. So overall, same concept. Go out, right? Zoom out. Look at the overall flow of this market. It has definitely been clearly to the upside. All right. So we want to stay with that, right? We don't have no evidence right now of the market shifting trends. I mean, there's certain things that we could talk about in here, right? When we actually get to that point, that could be giving us evidence that we might see a push lower, right? But again, before we even see any of that, let's just look at what the overall swing is. All right, it's very important, guys. Even if we do have some type of evidence that there might be, we have to still overall stay with the overall trend here, right? So overall, we're still very much bullish. We're still very much bullish here, right? We're still very much bullish. Now we've just been experiencing this sideways choppiness for the past few months. Now, we are getting very close to the end of where this choppiness will meet. So we should expect a breakout very, very soon, right? Whether it be a breakout lower, whether it be a breakout to the upside, right? Or maybe it be a breakout to one side for a fake out and then go ahead and move higher, right? There's so many different opportunities here. I'm definitely going to be staying with the trend no matter what, though, right? So I want to look for the opportunity to go ahead and continue this move higher, right? Continue to trend in this upward direction. So how I'm going to be playing is I'm going to be highlighting this level right here of structure, right? Because this level of structure is really going to be, in my opinion, like a make or break level, right? If we're able to see price really break above this level, right? Like give us a lot of momentum above, these levels of structure right here, then I'm going to be taking that as a sign that pound strength could really be coming in. And then I want to see a pullback. And then I want to go ahead and start looking for buys off of that. Because then at that point, there's a very good chance that we can actually go ahead and really break out and start seeing this thing trend. So that's really what I want. I want to see us clear this, right? If we can clear 163.26, 163.3, if we can clear that, then I'm expecting continuations. If we don't clear that, then we're probably going to just stay inside of this range until we eventually are able to clear it. All right, but I like this, though. I do like this because I think this is something that could really happen early on. Now, keep in mind, guys, again, with their GDP numbers getting released at the end of the week as well, that can definitely influence what price is about to do throughout this week, right? It can start setting up in so many different ways because of the anticipation of what those numbers can actually do. Remember, big money is positioning themselves now, right? Or they've been positioning themselves for a lot of these big major news releases. If you want to trade a GDP release on the day of it, at the time that it actually releases, you're playing with fire, right? You're playing with fire because now you're going to have to try to chase the markets if you miss your trade. I mean, there's just so many different things that can actually happen. But when you actually try to position yourself way ahead of the time, like smart money does, the big boys, see, then you'll be able to be ahead of the curve. And then you could just go ahead and just ride the wave for as long as smart money rides the wave, right? So we have to really start thinking of a different approach on how we actually want to trade news. It's very important to understand it, but play, off of the rumors. And that's something that we could do here with pound yen, right? The rumors is that GDP is going to decrease, right? So if GDP does decrease tremendously, right, that could potentially weaken their economy, right? Or is definitely going to weaken their economy. Why? Because lower GDP numbers is going to bring fear, uncertainty, and doubt. And showing that their actual economy is starting to contract, which means money is getting sucked out of it. When money is getting sucked out of it, that means people's assets are losing value, right? So when people's assets are losing value, people like to take their money out of those assets, those riskier assets, like I said, and we'll put it into, again, government bonds, fiat currency, whatever the case may be, right? So with all that said, I think that the pound could potentially gain strength off of that news, right? Off of GDP actually coming out much lower, right? Like literally coming out much lower. That can definitely go ahead and cause the actual currency to gain value, right? Because people are going to be going from their assets into fiat currency, and the demand for that fiat currency is going to increase. And as demand increases for that fiat currency now, because people are trying to liquidate their assets, is going to cause the value of it to gain strength. So that's why I think this is a very good opportunity for us to get in. And if we're able to get an opportunity to get in right here, way before Friday, and this thing starts trading higher, and then by Friday, we're already all the way up here, or even all the way up here. Like our entries are right here. We're all the way up here, riding out this whole move. We're up already hundreds of pips. And then news comes out, and it just absolutely moonshots us. See, that's how you really go ahead and take advantage of news, right? Playing the rumors, right? The rumors, I think we're going to go bullish. So I want to look for the buy early on in the week. Because by Friday, when the data actually comes out, and whether we see a whiplash against the overall move, like we see a pullback or so, a deeper one for whatever reason, our entries are right here. So even if we do see, our entries should be safe. And then on any type of news that goes against what we believe, that's just opportunity to go ahead and look for more entries. But the fact we're getting in early gives us a lot more opportunity, a lot more leeway to actually take advantage of a news-based move. Getting in ahead of time. Right, so that's what I'm going to be playing, guys, going into this week, especially for a lot of these pound pairs with that type of news on the horizon. If I can get a buy entry somewhere around here, break, retest type of entry, I'm going to hold that all throughout the entire week. Right, stop losses will be at break even at a certain point. Right, I am not going to risk. Once I get the opportunity to go risk free, I'm going risk free 100%. So I really don't have to stress about it no more. Right now, I can't lose. So no matter what happens with news, it is what it is. But I like the chances of this to continue going higher, especially depending on how the news comes out. So I definitely am going to be playing that, guys, going into this week as well. Definitely setting up nicely. So we'll see how that one actually plays out for sure. Right. So another one that I'm looking at going into this week, that's another one. Let me get that one up there. Pound dollar was another one that played out absolutely beautiful last week. And I think that we're just going to see more continuations to the downside. Right. I just want to see more bearishness for this. I mean, if we really look at this, what have we been doing? Going to the downside. Right. And as of lately, or at least right now, we did see a little pullback right here. Right. But then the market started creating this little head and shoulder type pattern. And we finally just broke the actual pattern, right? For all my pattern traders out there, right? Even though I don't trade these type of patterns, you know what's crazy? I actually do trade these patterns. It's just different terminology on how people want to call it, right? But for basics, to keep it basic, this is usually what most people actually know this type of pattern as a head and shoulders, right? For me, I look at this as just price action that's starting to shift momentum. So now that we actually see this strong push, look for continuations. Guys, look for continuations, right? At least for right now. Now, I know you guys are probably thinking like, hey, but didn't you just say, man, you're expecting the pound to gain strength? You got to understand who we're actually paired up against now, right? We're paired up against the US dollar now, right? Anything against the dollar, in my opinion, is not going to succeed, right? Because the dollar is the strongest currency across the board. So I don't care what type of news comes out for the pound. I don't think long-term is going to be more dominant than the US dollar, at least for right now, right, with current market conditions. So I'm expecting bearishness for that. But for pound with other currency pair crosses, especially pound yen, I'm definitely expecting the pound to dominate over that, right? So just to clarify that, right, before people go, in the comments and start saying stuff, oh, what, bro, didn't you just say? I just wanted to clarify that, right? It's very possible for that to actually happen, right? So overall, though, I like continuations, right? This definitely showed you know, a lot of bearish momentum really start to come in, especially already being in a bearish trend. You know, seeing something like this, like again, this type of pattern during the pullback, we see this market really start to show pullback structure, but then we eventually end up breaking that. Like, this is beautiful. This is what we want to see if we want to expect more, you know, potential downside, right? Or continuations of the overall trend. These are the type of patterns, guys, that we have to train our eyes to identify. It's not always going to be this pretty, because this one is pretty, right? We can have ones like this where we see big push up, decent retracement, and then we see the market overall just start to create structure before we continued, right? But your ability to identify these patterns during a pullback is what's going to allow you to align yourself with the actual overall trend, right? See, look at this one here, right? We had big push. Here's the pullback, right? We started seeing higher highs, but then eventually we shifted, broke structure, we shifted, and then we started creating lower highs before the big push lower. All right. So again, look at this. Big push lower, pull back, lower high, and then we always seen was straight lower highs after that before we continued. Right. So then we seen the push right now, higher high, first lower high. So now we can see the next lower high before we continue. Right. This is the best way, guys, to really trend trade, right? When you're actually able to identify structure, market structure, price action, being able to read that is crucial. If you want to learn how to really trade from a technical perspective, you have to learn how to read price action and structure. So that's why I think we're still experiencing some bearishness, right? So where could we look for entries from now, though? Well, where did the selling momentum really come into play? I mean, look at over here, right? Let's look at this previous play right here. Okay, we've seen the pullback, and then we've seen the market reverse. Very bearish candle, right? A lot of momentum clearly entered the market right up at these levels right here, right up in here. Why? Because we can see how big this candle is, right? Selling pressure really came in very aggressively right there. So when price went back up there, guess what? It reacted, gave us an opportunity to sell, came back one more time, it reacted, and then you could have caught this crazy, crazy sell-off. Now, again, same concept, though, what comes over here. Where did the selling pressure really start? Right here. So if we want to look for another entry to potentially continue this move, that will probably be the best scenario. Right? See price make its way up here. And since we see that bearish momentum came in off of this level, that's where we can potentially expect the momentum to pick back up again. And then we just continue selling this specific pair. All right. That's really all trading really is. Identifying, for one, figuring out your overall sentiment, right? Before I even looked at any of these charts, I went to the news and I figured out what my sentiment would be for the week, right? Remember what I was talking about, the dollar? When I talk about the dollar itself, I'm more so using that as a way to create or to figure out what sentiment is. Because if I see that we have strong dollar potential, I'm risk off. If I see we have a lot of weakness coming up for the dollar, I'm risk on. And you could tell that by how money's flowing into it. You could tell that by the levels of structure that price starts to create and how it moves. You can tell what type of sentiment we're experiencing. So that's why I like to use it. And then it just correlates with everything else, right? But overall, guys, right, this looks very, very attractive to me, right? Figuring out your bias from a fundamental, sentimental perspectives first, identifying the trend from a technical perspective second, figure out order flow, and then identifying your areas of supply and demand to look for entries off of is next. And then it's just all about pulling the trigger. Once price gets up into those areas of supply and demand, are you actually pulling the trigger? When you pull the trigger and you enter those positions, that's you taking shots, right? Let's say you wanted to be a professional basketball player. If you want to be a professional basketball player, in order for you to get to that level, you have to take shots, like thousands of shots weekly, maybe even daily thousands of shots, right? Because they're trying to perfect it, right? Same thing with trading, guys. If you want to perfect trading, you have to take your shot. You have to actually go ahead and enter that trade to see exactly how the outcome comes out. If you actually did an analysis and you think that the market is going to do something, take that shot. Why? Because now you're gaining experience. The biggest thing that separates the profitable traders from the non-ones is literally just the experience that one has. Anybody that's actually living off of trading, you can ask them, and they've been trading for years now, right? They put in the time to gain all that experience because they were taking their shot. You have to take your shot, family, if you really want to go ahead and get this. So anytime we see an opportunity that lines up, take the shot. So if price does come up here for GBP USD, and since I am overall bearish, I do like that we are seeing lower lows and lower highs. I do believe that we have a lot of selling pressure that started from right here. So if price comes back up into this area of supply, I'm taking that shot. If I lose, who cares? All right? Because if I lose, then that's probably just to run into the higher level of liquidity up here, and then I'll look for another opportunity up there. But the whole point is, if I lose, who cares? I gained experience. I took that shot. Gaining experience is far more important. I need y'all to write this down. Gaining experience in trading is far more important than actually profiting right now. Write that down somewhere, right? This is so important. Gaining experience in trading is far more important than actually being profitable or actually profiting right now. You have to gain the experience, right? Let me break that down, right? Because there's a lot of traders, guys, that have beginner's luck, right? They come in, they put some money in an account, they flip it, right? And now they're on their high horse. But guess what happens after that? All that money that they just made, they'll end up losing it the following week, the following day. Why? Because they don't have no experience on how to actually manage their trading account. They don't have experience on how to manage their risk. They don't have experience on how to actually manage their trades. Right? It's not the art of the making money that's going to make you a profitable trader. It's how you actually manage that money, right? It's having that experience to manage your money a certain way. Right? So it's that experience, but the way we gain experience is by taking that shot. Right. So overall, guys, I like GBP USD bearishness. I like that. That looks very, very juicy around the 1.21 levels. Right. I think there's a good chance for that to continue bearish. And if I'm wrong, so be it. Right. Let's go ahead and see what else we got here. Let's go take a look at UJ. Right. UJ was another one, guys, that absolutely played out exactly how we expected pretty much going into this week. Right. So let's see what else we got here now. What can we expect in this week? Well, what did we see last week? A lot of strength, right? Dollar strength finally started to come in again, all right? Because overall, we were experiencing some bearishness, guys, over here for dollar yen, right? The yen was starting to gain a lot of strength. I mean, there's different reasons why it was gaining strength, but overall, it was gaining some strength overall. We did start to see US dollar yen go ahead and lose a lot of momentum, lose some value. But overall, we have now started to see the market rebound. Right? We've seen price come back down to this level of structure. In fact, we even ran this level of structure prior to go ahead and go into this big pool of liquidity that was right below it. And then we seen big money coming in. Right? Remember what I said, right? Especially when we're at areas either of supply and demand or below at levels of supply and demand, right? Because if we have an area of supply and demand like this one right here, right? This would technically be an area of demand, but price came right to it and then just broke right through it. Right around areas of supply and demand, you also got to keep in mind that there's probably going to be pools of liquidity, or that there could be areas of liquidity on each side as well, right? That the market might want to run. So for this example, we've seen that, right? We've seen the market overall come down here. We know the overall trend is bullish, right? We know that, but it came down to this area of structure. It ran it, hit a pool of liquidity, and then it absolutely started to take off. That means there was a lot of buy orders just waiting for price to get down here. A lot of buy orders that were positioned around this 130.8 level. And then it absolutely shot up. And then we've seen price accumulate for a little bit. And then we've seen another big push up, right? So I like that momentum. I'm reading this level. I'm reading this price action. I know the overall trend. I know the overall buy. So when I'm reading this type of reaction off of a level of structure or support or demand, whatever you want to call it, that is telling me it's an opportunity for us to go ahead and get back aligned. So I want to look for the bullishness. I want to look for continuations. Now the question is, where from? Well, right around here. Where'd the momentum start at? down here. How? I mean, look how big this candle is. Like, let's keep things simple, right? Where did this momentum actually come out at? Like, what candles actually broke structure? Structure's right there, right? If we look to the left, this was a level of resistance, right? This candle, this big old blue candle, starts here, broke here. That's a lot of momentum. A lot of buyers entered the market right here at 133.056. So if we want to look for now continuations of that momentum, right, of this bullishness, because I don't want to buy at these levels that we're at now, right? Because then they gonna say, well, Abel, if it's that strong, should we just buy now? No, right? We already seen a big move, right? This is a pretty decent move. This is like almost a 200 pip move right here, right? So we already seen a 200 pip increase. I'm not jumping in here in the middle, right? Because then it's really a 50-50 chance of what price can do. Price can either continue or it can actually pull back. I don't want to deal with that, right? So where price is currently at now, for me, it's no trade zone. I want to see price pull back. And then from there, in an area where we know there's clearly a lot of volume waiting, a lot of volume positioned, that's where I want to enter to continue going higher, right? So if we can see price come down to around the 133.3 level, guys, for UJ, I'm a buyer all day long, right? So that one looks very, very, very attractive as well. Looking at UJ and just seeing if we can pretty much play, you know, a continuation type of opportunity for this market to go higher and higher, right? So looks juicy, very, very attractive in my opinion. So that's definitely something that you could play as well going into this week. And then the, let's see, I think it just, hold on. Yeah, so let's see what else we got here, guys. Take a look at gold. I know gold is also, again, a fan favorite, but let's see what gold has been doing overall. In my opinion, all right, in my opinion, gold is at a very, very interesting level, all right, because we're here at major levels of structure on the downside, right? But we're also here at major levels here in the, like this little midpoint right here, where we had a lot of buying pressure right here that actually entered this market that shot us up tremendously, right? That broke, I mean, it broke numerous levels of structure, right? So we clearly had a lot of buying momentum here. But when price came back to this level for the third time, it completely got erased, right? Sellers came through and said, nope, not today. We don't want you guys buying at that level no more. So the fact that we did see some type of reaction like that gives us really two opportunities. We could see the continuation, which is what I think is actually going to happen. We do see bearish continuations here for gold. I think it's possible, right? I think it's possible. I would like to see gold really come back down and test around 1730s. Or if price says, nope, we're actually going to continue this move higher now. Now we have our next play, right? Depending on how this market reacts, guys, to this level right here, is going to tell us what the next opportunity is here for gold. Because if we break back up, back above this level right here, this flip zone, previous structure, price broke through it, previous structure right now. But if we break back above it, then it could realistically go ahead and see more higher pricing. So again, we're at a very interesting level here for gold. I'm playing the reaction lower. I believe we're actually going to go lower in my opinion. So I'm going to be playing that going into this week, seeing if we can find some shorting opportunities, especially where we're at right now. Like, in my opinion, we're at a prime level to really see an opportunity to at least come back down to 1734, 1735, maybe at least to 1740. And that's a pretty decent move. So I'm personally going to be looking for shorts going into this week. And I'm going to be looking for an opportunity around this 1784, 1785 level is really where I think there's a good opportunity for us to go ahead and go short. I'm actually going to make this, stand out a nice little bright yellow. Right. So that's what I like. That's me. Right. That's me. Right. If you don't like it, it's cool. You know, everybody looks at the market a different way. But that's what I like overall, guys, for gold. So overall here is definitely something I'm going to be trying to pay attention to and seeing if I can go ahead and get involved and ride this move lower, in my opinion. So, but overall, you know, this is pretty much what I'm going to be looking at going into this week. I'm extremely excited for this week. These opportunities are definitely positioning themselves, guys, to give us some long-term swing positions. Obviously, if you're a scalper, then you could definitely do that. Day trader, you could do that. But you know, there is some chance here for us to ride out some long-term plays as well and really ride these things out much further than where we actually entered at. But that's pretty much how it looked like. I appreciate you guys on here on YouTube, and yeah, let's do what we do.